Good morning, everybody, and welcome to the TMK webinar. My name's Dougal Ferguson. I'm the CEO of TMK Energy. Look, before we get started on the presentation today, just want to draw your attention to this morning's very exciting ASX release that we made with regards to production update. And obviously, it's very interesting times for the company and the project, with gas really starting to flow out of our Lucky Fox number 7 well, which is high in the structure and one of the wells we would expect to be producing early gas. So that's very exciting, and look, we're very obviously doing a lot of work at the moment to understand more and how that's sort of fits in with the reservoir model. But it's what we've been chasing for a while, is to get these to this desorption pressure, and is very positive outcome for the project to date. I can tell you that the record rate that was announced this morning has already been surpassed, which is great, over the last 24 hours by a reasonable amount. So it's certainly looking trajectory-wise on the right, going in the right direction. So we'll obviously be monitoring that very closely over the next little period, and hopefully look for updates on that as we move forward in the next few days. I just also draw your attention before we start to there is a research report being published yesterday by Bridge Street Capital, and anyone who's interested in getting that research report, which will be on our website in the coming days, please just contact us and we will send that through. So look, just a bit of background as well on this presentation today. The presentation is really focused around sort of more technical aspects of the work we've been doing, and the significant amount of work that's gone in the last few months over what is a relatively quiet period in the markets to come up with a conceptual development plan, really based on all the data that we've been accumulating over the last couple of years, and really gone back to basics, looking at the technical aspects of the project, and developing what we've now come up with as a conceptual development plan. So this has been a fair bit of work. Obviously, the driver for this is our next phase, which is really looking for a project partner, which could come in numerous different forms, but that process will be kicking off very, very soon. So look, I'll just start walking through the presentation, but as we do so, hopefully this works. There's a little flare, excuse me one second, flare there of number 7, and that's the well that this is a few days ago, and obviously the flare is a little bit higher today than it was a few days ago. But that just gives you an indication of what's happening at the field. It's not a very good picture because it's taken from our security camera, which obviously we monitor closely. Now, just before I get into the actual presentation on the conceptual development plan, look, just to remind everybody, there's 3 key elements that you need for a successful CSG project. Those 3 key elements are permeability, which we have demonstrated we have certainly in the upper coal seam where we're targeting at the moment. The second is a defined desorption pressure, which we'll go into a bit more detail in today's presentation. And again, we have that within plus or minus 10%. You're never exactly sure because it's based on data collected over time, but we're very confident we have a defined desorption pressure now. And number 3 is the ability to actually reduce the reservoir pressure. So if you're producing water and the reservoir pressure is not reducing, you basically aren't making any progress in the desorption or the reduction of the reservoir pressure. So we've demonstrated that and been doing regular pressure build-up tests, which we did some more in early February, and all of those tests are showing that the reservoir pressure is decreasing. So those 3 key elements for a successful project are all here in the Gavantes project. So with regards to the phased development plan, obviously, the pathway to get there is prove commercial gas. Now, that's our number 1 focus and has been for a long time, is to demonstrate that we can reach commercial gas. Now, the recent announcement, or today's announcement, and recent announcements on the pressure decline, I think is showing that we are well on the way to doing that. And hopefully the next month or so, we'll see more positive results coming out from that. The other one, of course, is to advance offtake opportunities. We signed an MOU with the Ministry of Energy recently regarding power generation, but obviously there are other discussions underway with other parties for offtakes. We are and it's obvious from those pictures in today's ASX release and our pictures we put on the website, that we are in an area of heavy mining activity. There is power grids around us. So access to power access to the grid is possible, there is all that power that comes into the area where we are working actually is imported from China. So there's a definite market in the immediate region. Obviously, the third point is to introduce new funding and/or project partners. And as I mentioned earlier, that's a key deliverable in the next little while, and that process is formally kicking off now. But we see there's not only upstream partners, equity partners as well, obviously, but there's also midstream and downstream value-adding partnerships that can be done in this region, very close to China. Obviously, have a border crossing there that's very well used with all the coal trucks and products going south to China. So there's definitely other players that are potential partners there. And the fourth point is we have a clear and manageable development plan. So we obviously don't want to rely on other partners completely or funding partners. So we do have a very manageable development plan that can move the project forward at a steady pace. So just quickly, just an overall landscape of Mongolia from the energy position. Look, Mongolia is, energy short and it's looking for solutions itself. It has a current issue with one of the old power stations in Ulaanbaatar, and there are regular power outages at the moment in the city as well. And it's obviously very cold there in these winter months, so it's a big political issue and something that the government is actively trying to address. And I think that speaks to our MOU with the Ministry of Energy, because they are definitely looking for solutions to make their power grid more reliable and have actually more capacity as well. So other large power users such as Rio Tinto have to import their electricity from China. Likewise, in the region we operate, all that electricity is imported from China. So Mongolia is definitely looking for energy security, and cleaner, scalable options that can deliver and help the government and keep the lights on, basically. So with the pathway we see from exploration to commercial gas and a full field development, look, the company's actually done a pretty rapid development from the first acquiring this project in 2022. Doing the initial exploration program, getting a 1.2 TCF contingent resource, not to mention a much larger prospective resource of over 5 TCF. We've done a pilot well program, drilled 7 wells, built all the facilities, put all the infrastructure in place that we needed. And more recently, we've gone back to basics with doing the reservoir management plan update, and that's really paid dividends so far, with gas rates continually going up month on month for 6 months, and also the water rates keeping steady, which is, again, one of the key aspects of this project, is to maintain and produce as much water as possible. The more water you produce, the quicker you reduce the reservoir pressure, the quicker you get to desorption. So obviously the next steps is, as we mentioned, commercial and partnership agreements and reaching that desorption pressure, which, touch wood, we might have already started that process now, and getting to a final investment decision going forward for a full field development. And, I'll put some dates in this presentation here, 2028. I mean, that would be a very, very rapid progress to get to full field development in a couple of years' time, but it's definitely possible. With regards to the project, I think everyone's aware of this slide. It's been around for a while. We're very close to the border, obviously, with China. 400 kilometers to the west-east gas pipeline system in China, but also very close to a lot of other major mining projects in Mongolia. And again, Mongolian mining projects are all energy short, looking for solutions, looking for options to go forward. So plenty of opportunity within the country as well. So we already have, as I mentioned, a large-scale discovered resource of 1.2 TCF of contingent resource, and now that's split into sort of two zones, if you like, by our certifiers, Netherlands Sul, up to 750 meters and between 750 and 1,000 meters, adding up to 1.2 TCF. Our phase one, if you like, is focused on the lowest cost resources, which is the 722 BCF of 2C. Lowest cost being the shallowest. So when we look at this development plan in total, that's the area we're targeting first, and we'll go into a lot more detail of that in the next slides. But so far, the finding cost for this resource has been less than 1 cent per 1,000 cubic feet, which is incredibly low. So there's also significant upside, as I mentioned. There's probably 5 key areas within the total block that we'll be targeting over time. We've obviously targeted the most known resource first, which is Narayansukhite. Then number 2 is an area called Sumba, which we've drilled a couple of wells out there already, and intersected coal. Number 3 is an area to the north we haven't really touched, and likewise 4 and 5. But those areas are future exploration potential that could add significant resources to the already existing 2C resource. Look, just a comparison again, this slide's been around for a while. People have probably seen this, but it just goes to show that the Gavantis project is right up there from a sort of worldwide comparison. It's extremely high quality and a very high density of resource in the area we have. Again, I won't go through this in too much detail. I think everyone's pretty familiar with this, but we are targeting a dipping coal seam in and the upper coal seam. We have a lower coal seam that we've already drilled into exploration wells into. The permeability in those coals didn't appear to be as good, so hence we've targeted the upper coal seam first. Obviously, the lower coal seam, like other projects, has the potential to be produced through horizontal drilling. And that could be something to look at in the future. But in the immediate short term, we're targeting the upper coal seam with vertical wells, which again, our modelling shows that vertical wells are the most, at the moment anyway, the most economic and best option for us. Again, exploration drilling results. Look, I think everyone's seen all this in the past, so we won't dwell on this too much. We'll just move straight through to the critical elements of the development plan. So number 1, as I mentioned before, is being able to calculate. One of the key elements of a successful project is to be able to calculate your desorption pressure. So this is done through through a process where they create a Langmuir curve, where you take coals out of the exploration wells, you take them away, you get your gas desorption, and then you calculate your adsorption ability, and then you come up with a Langmuir curve. Now, when we initially drilled these wells, the initial reservoir pressure, you can see is the blue line. You can see my cursor there, but hang on, excuse me. It's the blue line here. And then we've gradually reduced reservoir pressure over time, and we're currently sitting around here. Once you cross this line, you should be in your at desorption phase, and that's when gas rates start taking off. So the other key element is being able to reduce the ability to reduce the reservoir pressure. I think I mentioned that earlier as one of the 3 key elements, and that can only be done by taking water out of the reservoir and demonstrating you're reducing the reservoir pressure as you go. And I think we've demonstrated we are doing this, and the latest shut-in tests, pressure build-up tests or shut-ins, demonstrated that we have made further progress in this reducing the reservoir pressure towards the desorption pressure. So the red dots on this graph, if you can see it here, this is the simulation that we've built, and the aqueducts are are the actual pressures recorded. So again, matching pretty closely the reservoir model that we've built. So again, the building blocks we say are in place for this phase development now. We have a reservoir model that is showing that the critical desorption can be achieved. And again, today's announcement, I think, shows that we are getting very close, if not already there, in some of the coals within this upper coal seam. The concept of this production development unit we'll go into. This is a dipping coal seam, so it does require a little bit of different thinking to the way these fields are developed, say in Australia, where the coals are very flat and more ubiquitous, well, not ubiquitously flat, that is. And the economics drive the development of the lowest cost resources first. So in our development plan, we are targeting the lowest and the shallowest of the coals, where we know there's gas and permeability. It's modest capital to drill out what we call a PDU, or production development unit. It's about 25 vertical wells, probably about $10 million to get started, and that'll recover approximately 24 BCF of gas at a peak rate of 4.5 million cubic feet a day. So it's about a BCF per well, plus or minus. And again, this is based on the modelling on the current reservoir parameters we're seeing. But obviously, those numbers can improve with different drilling techniques. And again, I think it's worth mentioning that LF7, which we did drill in a slightly different way, is the best producer in the field at the moment, and is the one that seems to be reaching that desorption first. So there may be something in that, but again, there's a bit more work to be done to make that statement. And be confident that we know why that well's producing better. But look, it's a simple, repeatable process once you've got one PDU in place. Rinse and repeat, I think, is used often, but really it is about just developing east-west along this the Narran Sukkot area, and up to 750 metres, that recovers you 722 BCF of the 2C resource. There's a phase 2, obviously, which will go deeper, and that recovers you another sort of circa 500 BCF, and not to mention the additional exploration potential outside of this core area. So the economics of the full development, the full 2C resource of 1.2 TCF are certainly very robust at the prevailing gas prices. And again, I'd point to the research report put out, which does actually look at some economics which have been independently developed by John Bishop, the analyst. So I think there's a clear progression of how we take the resources to reserves, and we'll touch on that with the in Appendix 1 at the back of this presentation. So what does it actually mean in relation to other fields around? If we look at just what the Waitsia gas field, which people may be familiar with in the Perth Basin, it's been a long, drawn-out process to get there, and they're not actually there yet. Their nameplate capacity, but they're at 250 million cubic feet a day. We think this project, with its 3C resource, can get to sort of 200 million cubic feet a day over time, and 2C and 3C. And with 2C, just with the shallow development, 100 million cubic feet a day for a long period of time, over 35 years of production. So that's a very economic, as you can imagine. So a 1 million ton LNG plant, for example, requires about 133 million scuffs a day, and that's a big LNG plant for an onshore development. There are obviously other ways that we can commercialize this as well, but this is just looking at it sort of on a high level with regards to maximum gas production that could be achieved from these PDUs. So I'll just touch on the reservoir modelling project, because this is the crux of the work that's been done in the last few months. So taken all the data that we've had in the past from the production, looked at all the reservoir pressures and the water production and various other things, well completions, how it's all working. And look, that model's been put together at various iterations to come up with the model we've landed on, and that closely matches what's happening in the field at the moment. But so there's obviously 3 years of data to build that model. We've created this, as I said, a PDU which runs north-south up at top of the upper coal seam, which is my cursor. I hope people can see my cursor. But the red part of the image on the right is the top of the upper coal seam, and that is when the gas is desorbed from the top to the bottom in a dipping coal seam. So the gas saturation moves south or down structure once the up dip desorption is reached. So once we hit desorption at the top of the coal, you obviously start producing from those top wells, but you've got 25 wells in this, what we call a PDU, and each well is contributing to bringing that water down and the reservoir pressure down. So the wells at the southern part of this structure, or the bottom of the graphic here, produce way more water than the ones at the top of the structure, but the ones at the top of the structure produce way more gas than the ones at the bottom. So on average, it's around about a BCF per well, but the top wells produce more than the bottom wells. And I think that's just quite an important point, because that isn't necessarily the way it would work in, or has worked in Australia and in some of the projects here, which are your classic, people call 5-spot or 7-spot or 9-spot pilots. They just wouldn't work here and that's why many of our wells in our pilot wells project are at we have wells at the top of the structure and moving down structure, which are the water producers. So again, just what does that mean on an individual PDU? I think we just talked about this before. There's 25 wells, recovers about 24 BCF, production life 35 years, and that's the sort of profile you get from that. Recovery factor about 65%, and a maximum rate around about 4.4 million cubic feet and growing for quite a number of years before tailing off. Excuse me. When you look at that on a sort of a development of 30 PDUs, which east-west covers pretty much the area of our 1.2 TCF, up to 750 metres, this is the sort of profile you're looking at. And obviously, you would flatten this off to some degree because, with gas contracts and other sort of commercial arrangements in place, you wouldn't be looking at this sort of shape. But just on an additive basis, this is how it looks like. So how do we come up with that, and what are we using as our background? Well, we did look at some analogues around the world, and the nearest analogue is this is in the Fukang Basin, the Fukang Block, and that this is exactly dipping coal seam just as we have, and has been developed successfully. So there's a very big paper out on this, which is referenced there. And look, but it clearly is a development concept that works. And over time, again, modelling work suggests that as the gas is starting to produce, you have the potential to backfill with horizontal wells. But it will all come down to the ultimate development plan that will be done after much more data is gathered from the initial development. So I guess from the pilot well project, what have we learned? And it has been a learning process. There's no question about that. I think what we've learned is the data closely mirrors the reservoir modelling work that we've done now. So there's a clear correlation and a high confidence now that the reservoir performance can be predicted and the field can be successfully developed. And that's the key message here. And the learnings we've had, I guess, over time is that we need to manage this reservoir quite carefully, and care and patience is required. Limiting the skin damage appears to be quite important, and touch wood. Since we changed the reservoir management plan about 6 or 7 months ago, we've had no workovers which A, cost you a lot of money, and B, interrupt your ability to produce water from the reservoir. So that's been a real positive, and something that was a bit of a leap of faith, but I think we've shown that it's been the right thing to do. Again, I'll just point that out on the graph. Now, the graph here is a few days old. It's the one that was out on today's ASX release, shows a very large spike back up above 700 cubes here for the last couple of days. But look, this is really just trying to demonstrate where we started with the 3 pilot wells back in, sorry, my cursor's on the screen here, back in July 2023. We had some encouraging signs here. Then we drilled 3 more wells, which is the period of where the gas rates are lower here in phase 2 of our pilot well program. And again, had some interesting results, but this is where we were pumping the wells quite hard, and we had a lot of workovers and blockages in the pumps, and that's what has caused a lot of the spikiness, and we weren't getting a very flat water rate, which again at the time I guess we didn't think that was an issue, but did a bit more research. We drilled another well here, number 7, which is the well that's now producing at the highest rate. That well was drilled slightly differently with different mud system, and it's the only well we've never produced with the water below the coal. And again, if that's the reason, we don't, can't exactly point to that as the reason that well's kicking off now as a good gas producer, but it could certainly have something to do with it. Now, you can just see from that point onwards, we've had a relatively flat water production and gas rates going up quite significantly over the last 6 months, and particularly in the last month or two. Look, again, I won't go into this, but just point out where number 7 is for people's reference. So it is one of the highest up-dip wells in the structure. So it's one of the wells we would expect to produce first. The other one is LF2. LF1, which is actually probably the highest up-dip well, it was one of the first wells we drilled, which was 1, 2, and 3. It's probably just a little bit too far away to be getting any real benefit from the other wells, but certainly 7 is the one we've got our eye on at the moment for obvious reasons. Just a summary of the wells there. Again, this is all old information. I won't go into too much detail here. So look, just to summarise, I think we have spent a lot of time going back to basics, looking at the raw data, analysing it all, putting all that information into a product to build a reservoir model, but also for what we're calling an information memorandum for potential partners coming forward. And look, everything's starting to stack up, and certainly the model, as I said, closely reflects what's happening in the field. And this recent spike in gas is certainly, is a great positive and a good demonstration that the model is accurate. So as we move forward, we've got this reservoir management plan in place now, the reservoir model built, and we think the chances of a commercial outcome have improved significantly and are looking better day by day. So maintaining production from the pilot well project is absolutely key. So maintaining water production, maintaining the reservoir, reduction in the reservoir pressure, and reaching that critical absorption, I think, even by today's reaction on the share price, that's what people are looking for, and that's what we're 100% focused on. The other thing where I'm 100% focused on is obviously maximising the value for current shareholders, and doing everything we possibly can to demonstrate this project will be commercial. Obviously, we need all companies pre-revenue need capital going forward, and we've got various strategies in place to try and address those issues. So look, just to finish off, I'll just touch on this slide because a few questions have been asked in the past regarding converting 2C resources to reserves. And so look, we have been in touch with our reserve certifiers and different reserve certifiers to question how we would go about looking at converting resources to reserves in this project. The difficulty being that, or it's not a difficulty, but a nuance being that it is a dipping coal seam, and we have an extensive 2C resource across the east-west, which actually expands further than what's on this map here in front of you. But look, a concept that we've discussed, and it is early discussion, is that as you move forward, which each PDU, which are the dotted white areas, that's what we're calling a PDU. As you develop a PDU and you get gas flowing, and you can show commerciality from that one. So, for example, this is near the pilot well, but if we develop the top third, if you like, of that PDU, we will probably be able to get 2P reserves. These are not resources, these are reserves. So 1P there, 2P as you move away from that, and then 3P. And as each of these PDUs gets drilled out and reserves are added, that sort of progression happens across the project. So, you could go and drill another pilot project further along and get the same result in the sense of the same progression, and gradually these things meet up. But we won't. It's unlikely that any reserve certifier will give you reserves across the whole project without doing this sort of progression. But that doesn't mean that the resources don't change. It just changes classification as you start to drill these things out. And I think confidence obviously would improve with the certifiers, that is, as you got more and more production and more reserves being certified. So look, this is schematic at the moment. This isn't agreed with the certifiers. This is just something we've developed in conjunction with them, and something that they're considering and putting through their processes to help us understand how that progression would work. Look, that was it for the presentation. Hopefully that's given people a bit of an idea of what we've been doing, where we're going, and how this field can be developed in the future. And as I said, hopefully the confidence levels are increasing, certainly month by month and week by week at the moment, with regards to the positive results we're seeing from the pilot. Yeah, one question here is, can you give us any color on more detail about the partnering plan and the process? Yeah, look, certainly we've, as I said, done a very big project to get our data in an order that we can go out and start that process basically now. So we'll obviously targeting, Southeast Asia is obviously a key market for us. We have a partnership in China with a group called J Energy. They'll be helping us and have been helping us to date. And one of the key aspects they bring to the table is the ability to know who and to talk to in China, and they do know all the parties over there who would be potentially interested in this. We're obviously also taking a broader approach, not just China. There are other parties we're talking to and will be talking to in the future. Update on the capital requirements. Yeah, look, obviously, as people have seen from the quarterly reports, and we know that the money, we always need more capital. And as I said, the number one goal here is to maximise value for existing shareholders, and we're looking at various avenues and different access to capital to take it forward. So the capital requirements this year are really discretionary to some degree, but what we'd like to do is obviously advance the project as quickly as possible, and drilling a few more development or appraisal wells in the project to accelerate that gas production in line with the model is obviously something we'd like to do, and we've done all the planning and currently in the final phases of coming to a decision at the board level as to what that looks like. But hopefully it's at least a few more wells in and around the pilot project, which are more appraisal / development wells as we move forward. Well, that's all the questions that have popped up. So look, thanks for joining us, and look, please just keep your eyes open for we'll obviously have a February update. I think it is a very exciting time, and we'll keep shareholders fully informed as the weeks progress as to how this recent spike in gas production goes and hopefully continues. And look, I certainly look forward to being able to share some good news in the near future. So thanks for joining, everybody, and please feel free to contact us again if you want access to, if you haven't already got it, the research report. It will be on our website in the next few days, so you'll be able to get it from there anyway. But yeah, please feel free to get in touch. Thank you very much, everybody, and speak to you soon, hopefully. Thank you. Bye.